Hey Bowtie Nation, Joseph Hogue here with your weekly stock market update, 9 a.m. Eastern every Monday morning with the stocks to watch and the stock market news you need to see. And Nation, Wall Street's most watched tech analyst just revealed his 10 stocks for 2026, and a few of them even surprised me. These stocks are leading in the next wave of AI, and I'm going to walk you through all 10. Stick around, and I'll also give you an update to CrowdStrike Holdings, ticker CRWD, Nvidia, NVDA, and an update to our stock market outlook. First though, don't forget to look for the special invite link to the Blossom Investing app in the description below. You're going to see my entire portfolio, plus join more than 500,000 investors to see what everyone else is talking about. It's totally free to download, so look for that invite link below. Back to those 2026 stocks though, and folks, there is no shortage of analysts with their must-buy lists on Wall Street, but few have Dan Ives' combination of credibility, popularity, and the ability to go on national television looking like he just wandered in from a Hawaiian luau. A 25-year market veteran and managing director of research at Wedbush, Ives has carved out a reputation as the tech whisperer. He jumped on Yahoo Finance recently for a quick 3-minute interview that not only revealed his top 10 tech stocks for 2026, but also managed to fit in references to Rocky 2, 4, and 5, and one to Lionel Messi. Now, Nation, you know I don't just jump to buy a stock on any analyst recommendation. Hell, half the guys I knew when I was an analyst were little better than trained monkeys. But Ives has the decades-long experience to help him see the bigger themes and the trends before the rest of the market. His AI Revolution ETF, the IVES, has beaten the market this year with a 25% return versus 19% for the tech-heavy NASDAQ and 14% for stocks in the S&P 500. And while a lot of that is just from being all in on tech stocks, it is still outperformance. Now, Ives is what they call a perma bull though, always positive on the market, so you don't want to treat every pick like a biblical prophecy. According to TipRank's tracking, his 54% success rate with 270 profitable ratings out of 496 puts him among the top 500 in more than 10,000 analysts. It's not legendary, but definitely someone you want to pay attention to when he narrows down to his top 10 stocks to buy.
Let's start with Nvidia, because you and I have been talking about Nvidia for years, but you also wrote another note today calling Nvidia the Rocky Balboa of the AI trade. What is left for Nvidia to achieve next year, and where does the stock go?
Look, it comes down to the demand to this point has only been the U.S. Think about sovereigns, what's happened in Asia, and ultimately what I think we'll be breaking back into the China market with the regulatory. Look, I think Nvidia earnings numbers, they're underestimated probably 15-20% over the next year.
Is that mostly because of China?
I think it's China, but also I think it's just overall demand in the U.S. Now, look, even though like on the Google TPU, worries about Tommy Gunn or whatever you want to say, Drago coming to get Rocky Balboa, just continue with the thesis.
I love Rocky 5, Dan. It gets a lot of crap, but that's a good movie.
I'm actually more bullish on Rocky 2.
Rocky 2, okay, fair enough.
But look, the reality is that there's one chip in the world fueling the AI revolution, and that's the godfather of AI, Jensen Nvidia. But look, demand and supply is 12-1.
Now, I have no idea where Ives is going with that Rocky analogy. With shares up 1,200% in the 5 years, Nvidia isn't exactly the come-from-behind underdog, but I agree there is a lot of upside surprise here on those China sales. With the trade war thawing a little, and reports are that Trump is considering loosening those export restrictions of Nvidia chips to China, which would be a huge boost to the top-line sales growth. Now that said, I would warn against Ives thinking that Nvidia can be the only chip fueling the AI revolution. We've already seen that AMD is signing deals and booking 30% plus revenue growth, where its chips are well suited for the lower compute inference demands. And just last week, the journal reported that Meta was in talks to use Google's new TPU chips, reducing its reliance on Nvidia, and Amazon has made breakthroughs in its own Trainium chip. Now, Ives' target of $250 a share would be a 41% upside on Nvidia from here, putting the company's market cap at over $6 trillion. It might take all of 2026 to get there, but after the 16% drop in the last month, I like the shares on that China upside.
And then let's hit up Palantir. We just had Alex Karp at our Invest event, and he made, obviously, he's co-founder of this company, he made a strong case for Palantir. What's your case for Palantir?
It's the Messi of AI. I mean, look, it just comes down to this is a company that when it comes to use cases, no one could compete. Now you could say it started off on the government side, but for all the work that we've done, that's why there's a name like the haters, they hate it, 12, despise it, 50, yelling from the mountaintops at 100. It continues to be, in my view, what's going to be $1 trillion company in the next 2 or 3 years. Now, look, is it super expensive today? Of course. But what happens when commercial bookings is 5x from where they are today?
And somebody please, in the comments, tell me what he means comparing Palantir with Messi, because yeah. Now look, I agree that Palantir has a lock on the AI use cases. I was recommending the stock after the IPO when it dropped to $20 a share, but these shares are the poster child for expensive AI right now. When investors are worried that Nvidia is a little pricey at 23 times on a price to sales valuation, it is very difficult to get excited about paying 107 times price to sales for shares of Palantir. Now, I agree that Palantir will be a $1 trillion company someday, which would be 150% upside from here. And that 50% plus sales growth is exactly what we like to see there in those AI stocks. But there are other stocks out there with that kind of growth. You've got SMCI, Nvidia itself, and Astera Labs. They're not trading anywhere near as expensive as Palantir. Nation, it just comes down to if AI stocks keep rocketing higher, you will be rewarded for Palantir. But on even the slightest weakness in that overall theme, this stock is going to hand you the biggest losses. Now, I would rather buy some of those other names on the list, the less expensive but with just as much upside and take less risk.
And then let's say another one, Tesla. Elon Musk signed seal and delivery. He's got his pay package. What does next year hold for them? And are robo-taxis, that rollout next year, the main driver of the stock?
Biggest chapter of growth ever in its history. It's about robotics. It's about autonomous. Musk now wartime CEO. And I continue to view, base case $600, bull case $800. They are going into what I believe, when it comes to AI, physical AI, two best companies in the world, it's Nvidia
Are they a car
and
company?
Tesla. They're not, look, I think it's almost offensive to call them a car company because I view them as just a pure technology company. I think investors continue to underestimate what that's going to look like.
Now, Ives has always been a huge Tesla bull, so you really have to do your own research here. Now, I agree that robotics and autonomous are the company's future, but absolutely nothing in the news leads us to believe that Tesla is anywhere close to either of these. Just last week, Musk tweeted that automakers do not want Tesla's FSD technology to license, just months after he told investors that licensing deals would be a big revenue driver. The robot displays have been revealed as remote controlled, and a lot of the forecasted upside depends on Tesla dominating the market, but really ignores huge competition coming from the Chinese robotics market. This one is a lot like that Palantir call. I like the company long term, but just don't think that most investors have the patience to wait that out. Ives and other investors don't want to say that Tesla is a car company because it is ridiculously expensive at 15 times on a price to sales versus other car companies like Ford trading at under 1 times price to sales ratio. But the company still books more than 85% of its revenue from car sales, and those sales were down 50% in Europe and up just 10% in US over the last year. Ives' base case for shares of Tesla at $600 per share would be a 39% upside, and his $800 bull case would be almost double from here, but I would wait for the stock to come back off of its highs into the 300s to start buying. Now, I think you get plenty of opportunities to buy into the stock before these major growth drivers in autonomy and robotics really start taking off. Filling out the top 5 tech stocks on Ives' list, and I don't think these are in order of upside, are Microsoft, ticker MSFT, and Advanced Micro Devices, AMD. Ives calls Microsoft the best positioned hyperscaler for artificial intelligence. I think the company's 27% ownership of OpenAI alone could be worth $1 trillion on the company's market cap. Analysts have an average target of $625 a share on Microsoft, which would be a solid 27% upside from here. Ives admits that AMD is gaining market share in AI chips at the same time that he says Nvidia is the one chip fueling the AI revolution, so there is some contradiction there. But I do like AMD on this recent drop. Even after the drop, we're still up 97% on our position of AMD, recommending it since February of this year. And rounding out the top 10, Ives recommends Apple, ticker AAPL, on the consumer AI revolution. And while I think Apple will do okay with the consumer AI, just by virtue of its extremely strong brand, it has fallen behind badly in AI. So what happens when other companies like Meta start rolling out their AI products first? I think Apple shares sell off as investors worry about its lock on those consumer products. It is only then that I would start buying Apple because I do think they get there on that AI eventually, but it's going to take longer than investors realize. Ives argues that Meta Platforms, ticker META, is a buy on its steep sell-off on spending worries. Shares are off this year's high of $796 a share by 19%, and I do like the stock right here. I think Meta has the lead on consumer AI with its glasses, and it's going to be first to really market to a mass appeal. Ives calls Alphabet's, ticker GOOGL, Gemini, the real deal, and it does look like the company is getting some market attention lately with its Nano Banana AI, and the stock is up 84% in the last 6 months alone. Now, I think we've missed the near-term upside, and the stock is getting pricey, but I'm buying if it drops anywhere back below $300 a share. Ives also recommends cybersecurity names CrowdStrike Holdings, ticker CRWD, and Palo Alto Networks, ticker PANW. And all you out there in the nation know I am deeply invested in the cybersec theme and these stocks. These two are the largest companies in the theme. CrowdStrike has the growth with sales of 20% plus this year and next, while Palo Alto is one of the few profitable companies in the space. I also own shares of Fortinet, ticker FTNT, Zscaler, ticker ZS, and Okta Inc., OKTA, but CrowdStrike and Palo Alto are two of my favorites. Looking at the stocks I'm watching this week, CrowdStrike Holdings, ticker CRWD, is the latest in that cybersecurity group to report its earnings when it releases on Tuesday with expectations for 20% sales growth, but really flat earnings growth. This is the big theme in cybersecurity lately, that strong revenue growth as the IT spending just cannot stop for protection, but the competition in the industry heating up so much that companies are spending all of it on R&D and marketing to the point that earnings are suffering. A full year, CrowdStrike is expected to see profits drop by 6% on this spending. It's why a lot of the other names like Zscaler and Palo Alto Networks have fallen hard on their earnings reports and why that group is down over the last month. Zscaler reported strong 26% revenue growth and earnings that beat forecasts, along with an increase to its outlook, but even that wasn't enough to satisfy this market. We could get another disappointment with CrowdStrike on Tuesday, but I've been using any dip to buy more since last year, building a 500 share position with an average cost of $350 per share and already a $78,000 profit so far. Okta Inc., ticker OKTA, also reports its earnings on Tuesday and has been one of the most disappointing in the cybersecurity space, but could still become a dark horse winner. Expectations are modest at just 10% sales growth for the quarter and for the year, but this is one of the few cybersecurity companies actually growing earnings, forecast to post 20% earnings growth to $3.37 a share this year. Now, I like the company for its market leadership in the identity and access management segment of cybersecurity, one of the few companies with an advantage in that segment. Microsoft has the largest market share, but Okta is close behind, and Palo Alto Networks just paid $25 billion to acquire CyberArk, CYBR, and its products in that segment. That makes Okta's leadership in the segment a prized possession and could land a takeover offer from another company. The Homebuilder stocks had a giant rally last week on lower mortgage rates, with all 5 major companies up more than 10% on the week. D.R. Horton, ticker DHI, led the group at 15% up, while the rest, Lennar, ticker LEN, Pulte Homes, PHM, Toll Brothers, TOL, and KB Homes, ticker KBH, were all tightly packed around 11 to 12% higher for the week. The rate on the 10-year Treasury broke lower to 4% last week, which brought down mortgage rates, and investors are hoping that continued Fed cuts is going to recharge this housing market. The Homebuilder Group is still down from 6 to 22% over the last year, and this rebound could continue into the next year if those rates continue to come down. Updating our stock market outlook, we're going to get the last crucial piece of inflation data this week before the Fed meeting on the 10th. The Personal Consumption Expenditures, the PCE report for September, is released on Friday, with forecast for a 0.3% month-over-month increase in prices. That's pretty much the same as reported for August numbers. Now that would mimic last week's PPI report of inflation that showed pricing pressures above the Fed's target, but still around 3% from last year. It did help drive up the odds of a Fed cut this month, and this week's inflation report should back that up, supporting the rally in stocks. In a previous video, I recommended on November 17th to wait for around 65.75 on the S&P 500 to really start buying the dip. We got there just a few days after. Since then, stocks are now up 4.9% from the sell-off low and should have support heading into that Fed meeting on the 10th. The Fed Watch Rate Tool, which shows market expectations of a Fed cut, shows 87% market odds that we get another cut here on the 10th, helping to drive borrowing costs lower and support those stocks along with the economy. My worry, though, here is that this becomes a sell the news scenario where investors pile in before an event only to start selling immediately afterwards. While the market expects 3 more rate cuts next year, this month's cut is expected to be the last until April, and the Fed members are probably going to try to talk up the need to wait for inflation to come down before those other cuts. Now that means, along with that language on inflation and waiting for more cuts, there's a good chance that the Fed's December 10th cut means investors have little more to look forward to, and the market sees another sell-off into the end of the year. Now, just like we did in this recent correction though, I would be taking the opportunity to buy the dip into 2026. Join me on the Blossom Social Investing app with the invite link in the description and see what over 500,000 investors are talking about. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.